Welcome back to Books and Backbone. I'm Donna Harris, CEO of Bookkeeping Made Simple, your host, and today's episode starts with a comment. I received it on one of my YouTube shorts a few days ago. A man named Tom left a comment that said, and I am paraphrasing slightly, that his wife is a bookkeeper who thought she was going to make good money, and she isn't. And now she's wondering whether she should keep going because bookkeeping doesn't provide a lot of money. I've been thinking about that comment along with some of the commercials and things that I've seen around bookkeeping. I see a guy promoting a kind of a bookkeeper school where he says you can make six figures doing bookkeeping. And so I really want to dive into this because Tom is right and he's also wrong. And the distinction between the two is kind of the point of this entire episode. Bookkeeping, as it is most commonly practiced, does not pay particularly well. That's true. Bookkeeping, structured as a real advisory-driven practice with recurring retainer client, pays very well. This is also true. The difference between these two versions of bookkeeping is not talent. It's not credentials, although I have found that mine helped me. It's not years of experience. It's how the practice is structured, how services are priced, and what the bookkeeper is actually selling. My suspicion is that Tom's wife, like so many bookkeepers I come across, is essentially what I call a kitchen table bookkeeper. She sat down at the kitchen table. She said, everybody uses QuickBooks. I can use QuickBooks. I'm going to hang up my shingle and say that I'm a bookkeeper. And then I'm going to accept all of the bank feeds, and that's going to be bookkeeping. That is how most bookkeepers work. And that's what today's episode really is about. It's for Tom's wife. It's for every bookkeeper who's grinding through transaction entry and wondering why the income doesn't match the effort. And for every business owner who's listening and wondering what they should actually be paying a bookkeeper. So let me start with commodity bookkeeping, and that's how most bookkeeping practices operate. It does not generate meaningful income. Commodity bookkeeping is transaction entry. Categorize the transactions, accept the bank feeds, reconcile the accounts, produce the reports, email them to your client, you're done. Rinse and repeat. It's priced by the hour or by transaction volume. It competes on price. I don't compete on price, just so you know. And it competes against a growing field of offshore bookkeeping services. AI-assisted categorization tools and self-service software that tells business owners they can do it themselves. This is where the kitchen table bookkeeper comes in. They sit down at the kitchen table. They say, I know QuickBooks. And QuickBooks says, oh, you can do this yourself. It's no big deal. When you're competing on price in a commodity market, your income is capped by two things. The hours in the day that you have available to work and the rate the market will bear for transaction entry. Neither of these numbers is very exciting. A bookkeeper doing commodity work at $30 to $40 an hour, which is the typical market rate for basic bookkeeping, working 30 billable hours a week, generates $46,000 to $62,000 a year in gross revenue. That's before software, before insurance, before self-employment taxes. The net income from that practice is probably not what Tom's wife envisioned when she got into the work. And the hours are real. Transaction entry is not glamorous. It doesn't scale. It doesn't leverage the actual expertise a good bookkeeper has developed. That's the commodity model. That's the kitchen table bookkeepers. And it's the model most bookkeeping practices default to not because it's the right model, but it's the obvious one. The model that actually generates meaningful income looks completely different. It starts with a different question. Instead of asking how many transactions do you have per month, or how much do you charge by the hour, that question leads to hourly pricing and a commodity engagement. The advisory bookkeeper asks, what financial decisions are you trying to make, and what information do you need to make them? That question leads to a different conversation, a different service, and a different practice. The advisory bookkeeping model is built on monthly retainers, a flat fee for a defined scope of work that includes not just the transaction entry and reconciliation, but the financial reporting, the quarterly review conversation, the cash flow visibility, the tax planning, the business advisory layer that turns numbers into decisions. When bookkeeping is priced as a retainer based on the value it delivers rather than the hours it takes, the economics change completely. A bookkeeper with 20 clients at $800 a month has $16,000 in monthly recurring revenue. That's $192,000 a year in gross revenue from a client base that's stable, predictable, and doesn't require constant sales activity to maintain. A bookkeeper with 25 clients at $1,000 a month has $25,000 in monthly recurring revenue, $300,000 a year from 25 client relationships. That's a fundamentally different business than the commodity model. Same credential, different structure. The hardest part of moving away from commodity bookkeeping to advisory bookkeeping is the pricing conversation. Most bookkeepers are afraid to charge what their work is actually worth, not because they don't believe in the value, but because they're used to competing on price. They're afraid clients will say no, and they've never been taught to articulate the value of what they're delivering in terms a client can connect. Here's what I've learned from pricing my own services and watching other bookkeepers price theirs. Clients don't pay for the hours. They pay for the outcome. A business owner who's paying $800 for bookkeeping is not paying for 10 hours of transaction entry. They're paying for the financial clarity that those 10 hours produce, the confidence to make hiring decisions, the ability to have a real conversation with their banker, the quarterly review that tells them what's coming before it arrives, the tax planning that means April is a confirmation and not a crisis. When you price the outcome, when you help the client understand what they're actually getting, the conversation about $800 a month versus $300 a month becomes it's a completely different conversation. The client who pays $300 a month gets their books done. The client who pays $800 a month gets their books done, and they get someone who explains what their books are telling them. Most business owners, when that distinction is clearly explained, choose the $800. For pricing to hold, for the retainer model to be sustainable, the service scope has to match the price. Here's what an $800 to $1,200 a month bookkeeping retainer should include at a practice like mine. Monthly transaction categorization and bank reconciliation is the foundation. Every transaction categorized correctly, every account reconciled to the bank statement every month without exception. Monthly financial reporting, a profit and loss statement, balance sheet, cash flow statement delivered within a defined number of days after the month end. A quarterly review, a scheduled conversation 4 times a year, where someone goes through the financial picture in plain English with the client. Revenue trends, expense analysis, gross margin, cash flow outlook, accounts receivable aging, tax planning, not a PDF, a conversation. Proactive communication, flagging things that need attention before the client asks about them. The cash flow gap forming 3 months out. The receivable that's aging past 60 days. The expense category that's trending in the wrong direction. Annual tax planning coordination. Working with the client's CPA to make sure that the books are ready for the return and that any year-end decisions are made with full financial visibility. Believe me, I'm always fighting to get my clients to schedule with me in Q4. Let's talk before the end of the year so we can make these decisions that are going to affect your tax liability at the end of the year. We've got to talk before then to make it worthwhile. That scope justifies $800 to $1,200 a month. It also requires a genuinely skilled bookkeeper, not just one who can categorize transactions, but someone who can have the advisory conversation, who can explain what the numbers mean, who can be a real financial partner to the business owner. That's the difference. And it's a meaningful difference in what the work requires. So back to Tom's wife. Is bookkeeping worth continuing? That depends entirely on what version of bookkeeping she's doing. I suspect she's doing commodity bookkeeping. Hourly transaction entry, competing on price, no recurring retainer structure, no advisory level. Then Tom's right to be skeptical. That model is under significant pressure from offshore competition and automation, and the income ceiling is real. And as a side note, I actually asked my AI models that I use whether or not they are ready to just be hooked up to QuickBooks and make these categorization decisions. Both Claude and ChatGPT told me no, they are not ready for that. They do not think, they understand that it has to have human oversight. So if you're seeing bookkeepers priced at very, very low, be skeptical, because that usually means that, especially if they're saying, oh, we're going to do 48 months of catch up for $200, please be skeptical of that, because that means that they are just have an AI model that's trained to do it, and that may or may not be correct. Or worse, they're sending it to India, and that comes with its own, or the Philippines. India in particular comes with its own set of risks. So find out. But in any case, commodity bookkeeping is under pressure from offshore competition, from AI, from automation, and that income ceiling is real. If she's willing to restructure, to move towards a retainer model, to price for the advisory ballot. I hate it when I glitch when I'm on camera. Anyway, don't know why it happened. If she's willing to restructure, to move towards a retainer model, to price for the advisory value she delivers, to build the quarterly review into her standard engagement, to have the financial clarity conversation with every client, then bookkeeping is an extraordinary business. Recurring revenue, low client churn, relationships that deepen over time, work that makes a real difference in people's financial lives, and income that reflects the value. The path from the first version to the second is not quick. It requires repositioning existing clients, having pricing conversations you may have been avoiding, and developing the advisory skills to justify the premium. But it's a real path, and the economics on the other end are completely different from where Tom's wife is right now. I also want to take a moment to speak directly to the business owners listening, because there's something in this episode for you too. If your bookkeeper is charging you $300 a month and doing transaction entry, you're getting what you pay for. Accurate records, and that's it. If your bookkeeper is charging you less than that, you need to investigate, by the way. I've just been seeing ads on Facebook for a tax and bookkeeping firm that's charging rock bottom prices, and my very first thing was, if something is too good to be true, it probably is. And the more I looked at it, the more I suspect that they're using AI to do this, because that's the only way it's going to pay. And if they're using AI, that does not mean it's correct. AI cannot pass the CPA exam. It cannot pass the EA exam. And to be worse, AI does not have a human behind it. If it doesn't have a human behind it to review the numbers and make sure everything is correct, then what good is it? You can't ask it questions. It can't be subpoenaed in court if you go to court. The IRS is never going to say, because ChatGPT told me so, as the reason for why your books are wrong. And if your books are wrong, your taxes will be wrong, which is where the IRS comes in. So if your bookkeeper is charging you a very low price, you're getting what you pay for. You're getting your bank fees accepted. And that's it. You're getting monthly reconciliations. If you want financial clarity, if you want someone who explains what your numbers mean, who flags items before they become problems, who sits down with you quarterly and tells you what's coming, you need to pay for that level of service. And you need to find a bookkeeper that delivers it. Most of them don't. The business owners I've worked with who have made the shift from commodity bookkeeping to advisory bookkeeping constantly tell me the same thing. Not that it's expensive. That's usually the last thing they're telling me. That's not even on their minds. It's the best financial decision they made for their business, because the quarterly review that catches a cash flow problem 3 months out, the tax planning that saves $15,000 before year end, the margin analysis that reveals the least profitable client, those things are worth dramatically more than the monthly retainer that makes them possible. Know what you're paying for and know what you should be getting. To Tom's wife, I hope this episode finds its way to you. What you're doing matters. The question is how you're packaging and pricing it. The commodity model is a grind. The advisory model is a business. And to Tom, thank you for the comment that turned into an episode. That's exactly what this kind of conversation is for. If you're a business owner who wants to understand what you should be getting from your bookkeeper, or a bookkeeper who wants to talk about how to restructure your practice, I'm happy to have either conversation. I am going to be working on a course for bookkeepers on how to restructure your practice so that you can make more money. Believe me, there is plenty of work. You can find me at mysimplebookkeeping.com. The first call is free. I'm Donna Harris. This is Books and Backbone. Do the work that's worth doing and charge what it's worth.